I don't want to take a victory lap, but we have been staying fully invested through the purple haze of policy uncertainty over the course of this year. It doesn't mean we're out of the woods yet, certainly with the market clawing its way back to near an all-time high here. There's still a lot of policy uncertainty, but we keep it going because the underlying fundamentals and the hard data side of the equation continue to be pretty sound. And so it means the path forward continues to be pretty sound.
Amanda, the path forward pretty sound, but arguably that's priced into the market. How do you think about valuation in this market where, I don't know, 20, 21 times kind of forward earnings here?
It's pricey. No matter how you slice and dice it, this market is very fully valued. Even when you back out the top 7 or 10 names, the market is not necessarily cheap. It's cheaper on a relative basis, but it's not cheap versus history. And so when we started off this year, believe it or not, we were not believers in much valuation multiple expansion to drive the market. Right. We really thought it was entirely a function of the path for earnings growth. I think that's still the story here, but I think the back half of the year is going to be, a slow grind higher. We think positive returns to finish the year, but I think we've gotten the lion's share of it actually already. So it's not about valuation multiples. It's really the path for earnings.
Okay, so what does PNC think we're going to see in July, in August, in the heart of earnings season?
Well, as much as I would like to take a summer vacation, I think it's going to be a very busy summer. From a policy perspective, really noisy. Like pretty much every week of the summer, there's something. And so I'm starting there by saying there's a lot of wild cards and a lot of variability that can change the narrative. But the path for earnings season actually looks pretty good for Q2. It's going to be weaker than Q1. We saw some pretty significant negative revisions, but all of that downdraft has basically slowed or ground to a halt. So we actually think that Q2 results the bar is set pretty low for expectations to come in, better than what the bar is set at. So I think it's going to be a pretty good upside surprise.
Amanda, we got to go off to wacko Fed discussion, but let me get this question in. I haven't asked this question in weeks, even months. What's use of cash look like? To me, it's the same old. Dividend growth, share buyback, use of cash. What is use of cash going to look like?
Use of cash has been basically sitting on the sidelines, right? I mean, corporate America has been almost paralyzed by the purple haze of policy uncertainty. And so we really have seen use of cash slow down a lot. I think in the back half of the year, with more policy clarity, and in particular around taxes and the budget, I think you're going to see a very different backdrop for cash. So I do think CapEx will see a resurgence. I do think buybacks will start to come back to life again. So I think it's going to be a very different sort of tale of two halves for 2025 in terms of cash usage.